Microsoft is making one of the biggest, most aggressive bets in the history of tech. We're talking about a $100 billion gamble, folks. And the stakes? Well, they could not be higher.
So get this, Microsoft just dropped a blockbuster quarter, record-breaking profits. So why on earth did its stock take a nosedive? It's this bizarre paradox that has Wall Street completely torn, and today we are going to unpack exactly what is going on.
Okay, the contrast here is just wild. On one hand, you see they absolutely crushed expectations, over $81 billion in revenue. But on the other hand, the market's reaction was, well, brutal, a drop of nearly 7%. This right here is the puzzle we're trying to solve.
All right, so here's our game plan. First, we're going to dig into this great disconnect between the killer earnings and that falling stock price. Then we'll dive into the bear case, the reasons why investors are getting so nervous. After that, we flip the coin to the bull case, Microsoft's absolutely massive long-term vision. And finally, we'll wrap it all up with a verdict and tell you exactly what to look for going forward.
So let's jump right in with this great disconnect. Seriously, it's like watching two completely different stories unfold at the exact same time.
Just look at these numbers. By every single key metric, we're talking revenue, earnings per share, and of course, Azure cloud growth, which is really the engine for their future. Microsoft didn't just meet expectations, they blew them out of the water. 38% growth in Azure? For a business of this insane scale, that is just phenomenal. On paper, this is a straight A report card.
And yet, the stock had its worst day in over a year. So, you have to ask yourself, what are investors seeing that isn't captured in these amazing headline numbers?
And that question brings us right to the bear case. Some people on Wall Street are convinced that Microsoft is barreling towards a massive spending hangover.
This whole feeling was captured perfectly by Stifel analyst Brad Reback. He issued a super rare downgrade on the stock and just flat out said, "Time for a break." That one little quote, it sent a shockwave through the market. So what's got him so worried?
This $37.5 billion. That's how much Microsoft spent on building stuff, data centers, servers, you name it, in a single quarter. It's a number that's almost hard to wrap your head around, and it is the #1 cause for all this anxiety.
You see, this massive spending spree is feeding a bunch of very real fears. Investors see that huge price tag and they worry about out-of-control costs. They're noticing that Azure's incredible growth might be slowing down, even just a little. They see the AI competition heating up like crazy from rivals like Google, and on top of all that, they're nervous about regulators in both the US and Europe circling.
So it all boils down to one simple but huge question that the bears are asking. Is Microsoft laying the foundation for the next decade of technology, or are they just digging a $100 billion hole with no clear payback in sight?
But hold on, that is only half of the story. Let's pivot now to the bull case. The argument here is that this spending isn't a problem at all. It's the entire strategy. They're building something people are starting to call the AI utility.
So what in the world is an AI utility? Well, think about it like this. Your electric company provides the basic power that runs pretty much everything in your life, right? Microsoft wants to do the exact same thing, but for intelligence. They want to provide the foundational AI infrastructure, the raw computing power that will run the next generation of tech for basically everyone.
And hey, if you're getting some value out of this breakdown, it would be awesome if you could just take a second to hit that like button and subscribe to the Stock Market Mojo YouTube channel. We do a lot more deep dives just like this one.
Okay, and this is exactly why Microsoft is so confident about spending all that cash. The adoption of their AI products is absolutely explosive. We're talking 15 million paid seats for their M365 Copilot, nearly 5 million developers paying for GitHub Copilot. This isn't some future promise, it's real, it's widespread, and it's happening right now.
And all that crazy product growth? It translates into this absolutely mind-boggling number, $625 billion in future contract commitments. This is the key point for the bulls.
Yeah, the spending is high now, but they'd argue it's to service contracts that are already signed, locking in massive amounts of revenue for years and years to come.
But how do you control the spiraling costs of all this AI stuff? Well, this right here might be their secret weapon. They're building their own custom chips. The Maya 200 is an absolute beast of an AI accelerator, and it's designed in-house to be way more efficient and powerful for their specific needs.
And the bottom line is right here. A 30% improvement in performance for every dollar they spend. By designing their own silicon, Microsoft gets more AI horsepower for less money, and they don't have to rely so much on outside suppliers. It is a classic strategy, just updated for the AI age.
So, We've got the bear case, we've got the bull case. Let's try to land this plane and get to the verdict. What does this all mean for you?
You know, this chart just says it all, doesn't it? It perfectly visualizes the battle we're talking about. On one side, you have the bears, like Stifel, who are basically saying the stock is worth what it is today. But then the bull consensus sees this massive upside, with an average target price way up near $600. This is not a small disagreement. This is a fundamental divide over the entire future of the company.
So what should you actually be watching to see which side is winning this fight? Okay, 3 key things. First, keep your eyes glued to that CapEx number. Does it start to get more efficient over time? Second, track the AI product growth. Do those incredible adoption numbers keep climbing? And third, watch out for any major regulatory news from the US or the EU. These 3 things will tell the whole story.
And that leaves us right back here with the ultimate question. Is Microsoft using all this cash to build an unbreakable competitive moat around its AI business that will last for the next decade? Or is it simply digging a $100 billion hole that it can never climb out of?
I really want to know what you think. Let us know down in the comments, which side of this $100 billion bet are you on? And hey, don't forget to subscribe to the Stock Market Mojo YouTube channel for more explainers just like this one. Thanks so much for watching.